All right, welcome to The Explainer. Today we are digging into NVIDIA's latest earnings call. And wow, what a quarter. They posted some absolutely huge numbers, but the market's reaction? Well, that told a whole different story.
Okay, so let's get right into it. On the surface, this thing was a monster beat. I mean, look at the revenue. $46.74 billion, way above what Wall Street was expecting. Same story for their earnings per share, which also came in higher than the estimates. But here's the kicker. Despite these powerhouse numbers, the stock actually dropped about 3% in after-hours trading, a real head-scratcher.
So that's the big question, right? What on earth spooked the market? Why would a record-breaking quarter get such a lukewarm, yeah, it was good, but not great reception from investors? That's the paradox we're going to unpack right now. All right, to figure this out, we've got to look past just the big, flashy headline numbers. We need to really dissect the quarter's performance and see what the bulls and the bears are both latching onto in the details. So, first things first, look at this. Data center is just a monster. It's making up a whopping 88% of all revenue. But, and this is a big but, that $41.1 billion number, it came in just a hair below some of the more aggressive whisper numbers on Wall Street. And that, right there, was the first little crack for a market that was priced for nothing less than absolute perfection.
And this next point, it really highlights the biggest headwind they're facing, the whole China situation. Management came out and confirmed what a lot of people were worried about. Zero. Absolutely zero sales of its H20 chip to China this quarter, all because of those ongoing U.S. export restrictions.
And it's not just a one-time thing. This uncertainty is now officially baked right into their forecast. The company's guidance for Q3, it flat out assumes that the China business stays at zero. Think about that. That leaves a potential $2, maybe even $5 billion revenue opportunity just sitting on the table, completely at the mercy of geopolitics.
Okay, but let's switch gears and talk about the bull case, because it is powerful. And it all comes down to one thing, the Blackwell platform. You heard CEO Jensen Huang. He didn't pull any punches, calling it a generational leap. And the best part? It's already ramping up at full speed.
And the numbers, they totally back this up. Blackwell revenue shot up 17% from last quarter. But you got to look at networking. Holy cow, it hit a record $7.3 billion. That is a massive 46% jump from Q2. Even gaming posted a record $4.3 billion. I mean, come on, the core growth engines are absolutely firing on all cylinders.
And if you needed any more proof of their confidence, management basically put their money where their mouth is. They've already returned over $24 billion in the first half of the year, and now they're rolling out a massive, new $60 billion share buyback program. That's not just a plan. That's a huge signal to the market saying, we are confident we're going to be a cash-generating machine for years to come.
So let's zoom out a little bit and see how all this ties into NVIDIA's much bigger long-term vision. Because honestly, this is where the real bull case gets its strength.
You really have to understand, CEO Jensen Huang is playing a completely different game here. He's not thinking in billions anymore. No. He is projecting a $3 to $4 trillion, with a T, dollar market for AI infrastructure by the end of the decade. Just let that number sink in. So what's going to drive that insane growth? It's this huge shift to something called reasoning agent AI. Now think about it. This isn't your simple chatbot that just spits out an answer. No, these new models can actually research, plan, and use digital tools to solve complex problems. This long thinking process, as they call it, needs exponentially more computing power. We're talking maybe 100 or even 1,000 times more. And you better believe NVIDIA is building the engines to power this future. They're on this relentless annual product cycle. Blackwell is ramping up right now as we speak, but his successor, the Ruben platform, it's already being made, already on track for next year. This innovation machine just does not stop. And look, the demand isn't just coming from the big cloud companies you always hear about. You've got entire countries building their own sovereign AI. That's a business already on track for over $20 billion this year. Then you've got the whole new world of physical AI and robotics, plus every company out there adopting their own AI agents. These are just massive, long-term waves of growth.
Okay, so you've got the near-term headache with China on one side and this unbelievable multi-trillion-dollar long-term opportunity on the other. So where does that leave us? What's our call on the stock going forward?
All right, here's the bottom line from us here at Talk Tickers. We are initiating coverage with an outperform rating. The outlook for next quarter is just too strong. They're guiding to $54 billion in revenue without even counting China. Yeah, the China situation is a big question mark in the short term, but the fundamental demand for what Blackwell and Ruben can do, it's too powerful a story to ignore.
Okay, now for something a little different. For a more tactical take, I want to walk you through a contrarian trade idea we're actually pitching, designed to play this exact dynamic.
We're looking at what's called a long-dated calendar spread. Now don't worry, the basic idea is pretty simple. You're selling a put option, which is basically a bet that the stock will stay above a certain price, and you use the cash from that to buy a cheaper, longer-dated put option way out in the future, just for protection. So what's the logic here? Well, we're betting that by late 2026, nobody's going to be talking about the short-term China noise. The focus will be all on the Ruben ramp and that multi-trillion-dollar future. That long-dated put you bought, that's your just-in-case insurance against some crazy black swan event. So it's really a bet on long-term dominance that takes advantage of the uncertainty we're seeing right now.
And of course, we have to say it. This is for educational and informational purposes only. This is not financial advice, so please make sure you talk to a qualified professional before making any investment decisions.